Before Hurricane Ian, Florida's insurance industry was already in a crisis.
Now, many consumers are on edge about how their premiums will change after the storm. Investigator Lewis Bolden has been following Florida's insurance issues for nearly 2 years now. And Lewis, industry analysts say there could be more increases.
Yeah, that's right, Lisa. 20 to 30% increases. Now the governor is calling for another special legislative session before the end of the year. The question is, will it offer relief? Many Floridians hope so, but did not see lower costs after the last special session.
Every year I get anxiety right around this time because I don't know what to expect anymore.
Sheila Guzman says the anxiety starts when it's time for her property insurance to renew. She says she had no damage from Hurricane Ian, but still wonders what she will face. According to her statements, in 2020, her premium was $815 a year. In 2021, it jumped to $1,500. This year, it jumped to nearly $4,000, and that was before Ian.
And how do you feel about that?
I couldn't believe it. I mean, I had to reread the letter. I thought that maybe they had made a mistake.
But it was no mistake, and the letter that came along with the statement confirmed it. Many of our customers have received or will receive substantial premium increases with their latest renewal offer.
We've seen increases throughout the years, but never this much.
That was before Hurricane Ian, and she wonders now what the increase will be.
The main thing that consumers want to know is, are my rates going to go down?
So it's an interesting question.
Paul Handerhan is with the Federal Association of Insurance Reform, a nonprofit, nonpartisan group whose mission is to provide affordable property insurance across the country.
We're already hearing from the private reinsurance market that they're going to increase their rates to the primary insurers 20 to 30% this year, which means that gets passed on to consumers.
Remember, reinsurance is basically insurance for insurance companies. They're required by statute to carry a certain amount of reinsurance or cash equivalents to guarantee they can pay their claims after catastrophic events like hurricanes.
So whatever you paid last year, you're going to pay more this year because the price of reinsurance is going up.
Before Hurricane Ian, Florida's insurance industry was already in crisis. During the last special session in May, the state put up $2 billion in taxpayer money as a layer of reinsurance for private insurers. Consumers did not see rates go down, but experts say they didn't increase as much as they would have.
There could be a scenario where the legislature comes in and provides a robust reinsurance package because the amount of reinsurance that they're going to have to provide is dramatically much larger than the amount that they provided in the RAP program.
Now, many believe the state providing reinsurance for insurers is the quickest way to stabilize the market so prices don't continue to rise immediately. Many say the measures that were put in place during the last special session still need time to take effect. We have been following the insurance crisis nearly 2 years now, and we will continue to follow it.
Yeah, and Lewis, it seems there could be some benefits to actually holding a special session this year rather than waiting for the regular session in the spring.
Yeah, a lot of people have that question, why so late in the year? Well, it's a way to try to get in front of the problem. If you wait until the regular session, by the time the legislature passes something, it won't take effect until next July. And they always say insurance reform takes 12 to 18 months after it's passed before you see the impacts of what they pass. So having a special session this late in the year shows you how dire the situation is.
And maybe they'll pass something this time that'll actually make a difference.
It just seems like we're not getting
Just
out of
kicking
this.
the can.
Right, yeah.
Exactly. So we'll see how it turns out.
Lewis Bolden, thank you.